Hello traders, this is Brian from FinancialTradingJournal.com. Today is November 9th, 2013, and welcome back to this week's FX Weekly Analysis. So here are the major headlines for this week. On Tuesday we have UK CPI coming out, which stands for Consumer Price Index, which measures inflation. This will affect the pound dollar. Wednesday we have UK unemployment rate, which will affect the pound dollar as well. Then we have the Bank of England, Carney will be speaking, and the inflation report will come out as well, both affecting the pound dollar. Thursday we have UK retail sales, which affects pound dollar, Canadian trade balance, which affects dollar CAD, US trade balance, which affects all US dollar pairs, and Friday we have Canadian manufacturing sales, which will affect the dollar CAD. So that's it for the major headlines. Let's get started with the analysis. First up we have dollar CAD. As you can see on the monthly chart, we are currently touching the red downward trend line. Right now it's touching it. Possibly, I mentioned last week that we would bounce on support and we would go up to test it. And then further targets would be aiming for the magenta and black lines above. This week on Friday, yesterday, it hit the red trend line and then bounced down. So it looks like it's still holding for now, but we'll see next week if there's strength based on Canadian data, whether or not it can break the trend line and continue moving upwards. On the weekly chart, it's just basically a closer look of how the price is reacting to the red downward trend line. Last week I mentioned we had this red candle, which is kind of like a pin bar, and that this week, if there was going to be a follow through, then we would hit the magenta trend line. But based on the daily chart, we had this yellow region here for support, and it didn't manage to break down below that. Instead, we bounced up and we targeted the red trend line again. And like I mentioned earlier, on Friday yesterday, it bounced down off of the red trend line. Moving forwards, if the red trend line holds, it will go down to retest this support area. If this holds, it will probably bounce up to test the red trend line again. A break in either direction will dictate the next move. If it breaks the red trend line, then we're going to target the first highs here of this one, of this high back over here, and then this high, and then above that we have the magenta and black lines above. Otherwise, if it breaks support, then it'll be aiming towards the aqua trend lines and the magenta trend lines below. So that's it for the dollar CAD. Up next we have the Aussie dollar. So on the Aussie dollar monthly chart, we still have a red bar. It's currently developing. It's been moving down for quite a while now. As you can see on the weekly chart, we have 3 consecutive red candles so far. And there's just one thing I want to point your attention to on the weekly chart. Starting down here, you'll notice these 3 red bars. So 1, 2, 3, changes direction, then 3 green bars, 1, 2, 3, then changes colors again, red. It didn't go 3 this time, but then it changed again, and it had 1, 2, 3 green bars, and then 1, 2, 3 red. So next week, considering this is a 1, 2, 3 red, based on the past several consecutive 3 weeks in a row, are we going to have a green week next week? Based on the pattern, do not be surprised if we get a green week. Pull back possibly up to the 9.5, 9.6, because we were testing that level this week. Didn't quite break above it. As you can see on the daily chart, we have this small downward channel forming right now. The high we got up to, I believe, was around the 9.54 area. Didn't quite get to the 9.6 and the 9.7 that I projected last week. If this channel decides to form, then those targets are invalid. So if you're trading this pair next week, be careful. Up next we have euro dollar. So as far as the monthly chart goes for the euro dollar, the only thing I have to comment on is we have currently a nice follow through on the monthly chart. Last month we had a shooting star pin bar that signaled possible reversal. This month we have a nice follow through with a red bar. If this candle closes red like this, that could signal a reversal change for the near future, for the next couple months, to continue moving down. Breaking this trend line would target the 1.27, and then breaking that level would target down in the low 1.2 regions. As far as the weekly chart goes, you'll notice I deleted one of the trend lines that I had drawn from here to here like that. I removed that because we broke that already, and then I drew a new one connecting this high, that high there, and the low here. Currently this is kind of like a cross pattern where you have this upward trend line which broke, and you have this downward trend line which was previously in effect over here, and then now it's going to back to retest the old downward trend line on the way down. Question is, do we bounce here and go back up to retest the upward trend line, or do we break down and target the lower upward trend line? So that's all I have to say for the weekly chart. Daily chart, I don't really have much to say. That's just a zoomed in version of the weekly chart. But you'll notice that price did bounce off of the 1.33 area on Thursday, and then price tried to break it again on Friday yesterday, but that didn't happen. It only got as low as 1.332. Next week, we'll probably try to test the 1.33 areas again. And also, just a side note, if you drew a fib line from the lows here up to the highs, the 1.33 area is a 50% fib, which is why it bounced off of that level. If this level does hold, we could be projected towards a pullback up to the 1.38 region. Although I find that highly unlikely because it has to break the upward channel going up, and given the long-term forecast of US taper from the Fed, Euro is projected to continue moving down in the near future as well. So all things considered, be careful trading this pair moving forwards, because until we break the 1.33 and even as low as the 1.316 area, it has the potential to retrace and go back up towards the 1.38, 1.37 area. And on the way up, it may not even stop at 1.38. It may just overshoot and aim for 1.4. That's the big round number, and that's also where the big monthly downward trend line resides, up there in the 1.4 region, which is somewhere around here. So that's all I have for the euro dollar. Lastly, we have the pound dollar. So as far as monthly candles goes, I would say the pound dollar is the most boring one, considering we have a doji candlestick which is sitting on the monthly trend line right now. The monthly trend line is pretty much useless on lower time frames like the daily and 4 hour, because as you noticed from last month, we crossed down, closed above it. This month so far, crossed down, closed above it, because currently right now the support is still at 1.588, and as I mentioned last week, unless that level breaks, we will not be going down yet. But 1.588 is the support to watch going into next week, considering next week we have a lot of UK data coming out, which will be affecting the pound dollar drastically. So that's it for the monthly chart. On the weekly chart, as you can see, the two new additions are the two aqua horizontal lines, support down here at the 1.588 area, and resistance up there in the 1.626 area. This is basically a consolidation range. When price consolidates, it's usually setting up for a big move in either direction once it breaks outside of the range. So basically people will have sell stops below the 1.588 and buy stops above the 1.626 area. The only problem with buy stops above the 1.626 area is we have the resistance at 1.63, that's a long-term resistance, and we also have the downward trend line as well. So that won't be a good trade if you trade it right above 1.626. The better buy stop would be above everything here, so somewhere in probably the 1.635, 64 area, which is well above all three of these resistance, because if it does break this, then it may go straight all the way up to the 1.65, 1.67, 1.7, and those were areas that I noted a few weeks back, I believe, that if it broke these levels, then it would target the highs of 2011 and the highs of 2009, because those are up there in the 1.67 and 1.7 area. So that's all I have for the weekly chart. Daily chart, basically zoomed in version, and just to re-emphasize what I talked about last week, we have support going down at 1.588. It has to break that, but even upon breaking that, the next area of interest is the 1.75 area, and then below that you have the 1.54 area. So that's going down. Going up, as I mentioned, we have the 1.626 as resistance, but right above that we have 1.63 as resistance as well, and the downward trend line, which is pretty much near 1.63. If it breaks that, then possibly buy stops around the 1.635 area could target higher areas, but that's a very long-term trade and pretty risky because it could overshoot and then come right back down. So next week, considering there's a lot of UK data coming out, pay close attention if you plan to take positions on the pound dollar. So that's it for this week's analysis. Hope you guys enjoyed it, and I will see you guys next week for next week's FX Weekly Analysis.